Hey, what's going on, everyone? This is Kirk here again at Option Alpha, the members only video update, Wednesday, February 22nd. So, I wanted to go through a lot of things tonight on the video. I think it's going to start becoming a very good time to really ramp up the trading. And I know that I've been dormant and on the sidelines and here and there and, kind of waiting and waiting and waiting and waiting. It seems like forever. But I really think that the next couple weeks here are going to be really good. So I'm going to be ramping up the trading, starting on the call side probably, and then shifting over to the put side once we do start to see some selling in the market, or at least a little bit of retracement. I did want to go through a couple things here tonight, just for you all, of course. As always, people always email me at the end of these videos. I still am baffled by it, but all of the links that I go to here are directly from the trading tools and links that are on the membership website for you guys. So this is all for you. This is what you get with the membership. All the calendars, all the expiration stuff, everything. It's all here, and of course, past video commentary, the current portfolio, trading alerts, etc. So all I did was just click on these trading alerts or these trading tools, and you can see here all the links. And I use this all the time myself. I go through here and I'll go through and check out everything, and I'll add and get new ones and take out old ones I don't really think are important. So market harmonics. This is one that I've watched a lot. I continue to watch. We're just starting to get into the bullish extreme territory, and really we haven't been there for a while. And I've mentioned this on a bunch of different videos before, is that even with the rally that we've had, we've seen barely any indicators turn over until really recently. The market, for the most part, the S&P is a little bit higher, but pretty much the Russell has been flat for about 2 weeks now, which is definitely a sign that we're running into some massive resistance. But you can see that we're starting to get just into this bullish extreme up on the top end. If I actually go down, let me see, where's the, there we go, put call ratios. Oh, no, that's not the one that we wanted there. There we go. Put call volume ratios, again, we're starting to get more towards into that bullish extreme territory. Again, we haven't even begun to approach that level for the last couple months until just recently, until really February, that we started to really start to fall towards that bullish extreme territory. On this particular indicator, we rarely get down in this area. I mean, rarely. A couple times in February, March of last year, again in February, March. But we rarely get down to that area. So it's worth noting when we do get down there that something is coming up, right? Again, we're not at the exact line in the sand, but we're close enough. Tomorrow, of course, just an update. Remember that we have initial jobless claims. Obviously, it's going to be a little bit of a market mover. Again, you can get this right inside the website, so a great tool. You can filter it, all kinds of crazy stuff, which is good. The history is what I wanted to point out on this one, is that it's actually had a pretty good history of beating. So don't be surprised tomorrow if the numbers actually come in and beat, right? I don't care where the numbers come in. I'm sure you don't care where the numbers come in, but they've revised their forecast lower. And so now it's going to be a little bit easier for them to beat. So we'll see what happens here. Possibly it's going to be easier for them to beat as we get in towards the spring season, et cetera, et cetera. The last thing I want to take a look at here before we jump to the charts is just the sector performance. I've heard a lot and have seen a lot of videos about this, about people talking about different sectors rotating as we start to top out here. Could happen, obviously could happen. There have been some drags in the market, and there have been some stars and some studs. I think that definitely industrials and financials are going to be ones to stay away from. I mean, look at the industrials performance on the last 6 months. Over 30%, 17% in the last 3 months alone. You had better believe that some money managers and hedge funds and mutual funds are going to start taking some money out of those. So if you have positions there, obviously, start to adjust your stops, move up your stop levels, start selling slowly, right? Don't get out of the position. And then look at things that have pretty much lagged. Healthcare, for more or less, consumer goods, all those types of things. Technology is actually a little bit of a lagger last 3 to 6 months. So look for those things to actually kind of turn around here. So if that does happen, what that means is that the market's just going to stay up here and be in a trading range as things go in and out of different sectors, but overall it's not going to be a huge outflow of money from the market. If we actually take a look at the charts, this is actually a chart of Apple I was looking at. If we take a look at the charts, I think that we've surpassed the appropriate resistance level to make this sustainable, right? We've moved well beyond what I think is a solid, sustainable move. I thought that the target was going to be about 1350. We are definitely going past that, not in any meaningful way yet. But if we continue to stay above 1350, we could well be on our way to 1400, no time at all. I think a more likely area to fall into is 1300, right? That's going to be the midpoint of this huge kind of box trading range that we've been in for the last, I don't know, year and a half now, all the way since January of last year. I think that's going to be the better target right in here, kind of this midpoint, right? A nice resting place. We've hit that area a couple times before in the past, even going back to April of last year. So I think if the markets do tend to come down, then they're going to stop right there. So my overall plan and strategy for members is going to be to start selling calls and call spreads this week and into next week, depending on how fast things roll over, and get in front of this market moving over. Then as the market moves down into the 1300 region, then I'll start adding puts below the market, right? Even if we do add puts below the market now, and the VIX has actually been pretty helpful in not continuing to move towards zero. It's actually spiked up a couple days. If we do add puts, it's going to be definitely below 1300 and almost certainly below 1200 on the S&P, relatively speaking. So on the SPY, that would be below 125. I think that is a safe area for now. I think as we start to get out towards April and May, as we start to enter those portfolios here in the next couple of weeks, then we'll have to continue to move lower. If the market moves lower, continue to move lower as well. But I think right now our good trading range is anywhere between 1375 and 1300. I think that is a pretty safe range. On the downside, I think the market's going to catch itself pretty quickly at 1300. Great round number support. It's got a lot of people that miss this rally. They're going to be itching and biting their nails off to get back in at any price. So I think that 1300 is going to be really, really strong for the market going forward. If we take a look at the VIX just real quick, I think this is the name of the game. Obviously, the VIX had a little bit of a spike up in February. Woohoo, right? 3 points. But as long as we can maintain this trajectory of continuing to move higher and at least not dragging ourselves lower, then premiums are going to be fairly good on the call side, right? As soon as the VIX spikes up to 25, even starting to get up to 30, God forbid, then premiums on the put side are going to be so attractive. We're going to be jumping in pretty much hand over foot, selling very, very far away from the market. So that's my overall strategy for now. Hopefully this helps with getting a look at some of these indicators and taking a look at some of these charts. Like I said before in the beginning of the video, I think that now's starting to become a really good time to get more aggressive and enter more trades. Thank you all. I forgot to even mention in the beginning of the video, but thank you guys for all the suggestions on the weekly options. I got a lot of emails back. Almost everyone is interested in it, so it's something that I'll definitely have to look into adding here in the next month or so. So as always, hope you guys enjoy these and happy trading.